Good trade. Dubs, dubs, dubs. Long inside the fair value gap, stop loss below the inversion fair value gap. It's also a balanced price range. Targeting midnight open. It's going to be my only trade for the morning. It's already 10:40. Now if we manage to take out this high, then I'll move my stop to break even. I'm watching this wick here. Again, my stop is below the balanced price range, inversion fair value gap here. I'm allowing for price to trade down into that. I don't like how everything else is looking though. S&P trading inside a 5-minute fair value gap. Gold breaking lower just a little bit. So I want to start seeing some strength in other markets. And I think, let me see. Two times 100. It feels good when I'm buying at the exact same time, but I need speed. Now, if we manage to take out this high, I'm watching to see how fast, because that shows me my voice is cracking. Where's my water? I don't have it. But I'm watching to see how fast we take out this high. If we just trade above it and kind of just hang around, that's not what we want to see. Taking off my wrist there. Again, this is the high where I want to see a lot of speed. So I'm watching right there. What I don't want to see is us trade above that and then hang around, retrace, come back down. This is a balanced price range. So my thought process is there's no reason for one to take out this swing low and to revisit this fair value gap. So I want to see us rip through that. People, because think about it, who's been making money all day? Shorts, right? So I want to see us run against them. So I'm watching the speed here in the next couple of minutes. But as far as the balanced price range, right here, we have this SIBI, single pass down, BISI, single pass up. That portion right there that overlaps, that's a balanced price range. Okay, so my stop loss, just to be safe, was below the entirety of the inversion fair value gap, but I was watching this balanced price range here. And now I'm watching to see, I want speed here. If we leave a fair value gap, I'll treat that as a breakaway gap. I want to see that stay open, and I say this all the time, or at least the lower half open. If you're long, if you're bullish, you want to see the lower half of fair value gap stay open. That signs a bullish order flow. So this right here, I'm treating as a breakaway gap. Ideally, I don't want to see that traded to at all. I want to see that stay open. And again, I want to see speed above this high here. And I was aiming for the midnight open, but I like 100 handles. That's more than enough So being content. My real focus though is the buy side above these highs up here. So now I'm moving my stop beneath consequent encroachment of the breakaway gap. I'm allowing for price to trade down into it only in the upper half. So I'm trailing my stop just below midpoint. We have a fair value gap with a down close candle, bullish order block. Now if we leave this fair value gap open and we start to run away, that tells me that we're really on side, or I'm really on side. Fair value gap here, we stay above consequent encroachment. Fair value gap, we leave it open. We have a small inefficiency there. Small fair value gap here. If we leave that open, that tells me we're really bullish and we're really likely to get back above the midnight open. But it's perfectly fine if it trades down into this down close candle. That's not a problem. It's that right there. Preferably, I want to see speed right there. It's even better if we don't trade down to that down close candle. So far, we dropped down, haven't touched it yet. If we run away and can't even come back down to the order block, that really tells me we're on side. Keep a track of time. We're in that London close. Okay, I always teach London close macro. Usually offers a retracement or just a complete reversal. That 11 o'clock hour typically forms the opposite end of the daily range. All right, now same thing I said above this high. I'm watching the speed. Speed is so important. I'm watching to see if we trade above this high, how fast do we rip through it? Trailing my stop up now beneath this down close candle that we failed to trade to. Just below mean threshold. So overall draw, I like the midnight opening price as a target, and I like the buy side here as a target. But this is already 100 handles, so I'm content with that. And if I could take partials, I'm only trading one micro, but if I could take partials, I'll pay myself there. And let me see. If we can just place above this high, I'll move my stop underneath this down close candle, lock in about 30 handles. Once we take out that high, I don't want to move my stop too early. Okay, there's that high. Now I want to see, can we get large, fast, up close candles as we rip through that? I don't want to see us just poke above it and then retrace. I want to see us completely rip through it. 2 minute fair value gap here. I want to see the lower half of that stay open, preferably the whole fair value gap stay open. So we'll sit on a 2 minute chart for just a little bit. And I have about 30 handles or so locked in. So if we don't get that 100 handle profit target, it's no big deal. I'll take 30 any day, especially as a first trade of the week. Okay, again, I want to see this stay open. We could trade down into it. There's nothing wrong with that. We just took out a high. But I'm watching to see if we can leave the lower half unfilled. So we open, trade down. This candle's low is 44.75. This candle's low 44.5. So we drop down literally by one tick. If we start to run away here, that signs a bullish order flow. That tells me I'm really on side. That's practically leaving this whole fair value gap open. All right, wicks or gaps. I want to see this wick offer support, just like, was that yesterday or Monday? Okay, wicks or gaps. So I see it just like this. I want to see us work in the upper half and expand higher. Not expecting this fair value gap to be traded to. So next PD array, I want to see offer support is the wick. Drop down to 1 minute so I can manage my stop. Now once we displace, or if we displace above this down close candle, I'll treat that as a bullish order block, and my stop loss will be trailed underneath it. And that'll allow me to lock in a good amount of profit. That might be close to 50 handles. There we go. Okay, and now I'm just measuring order flow. What's the next area of support that price can trade into? Let me go back real quick. This wick. It's from the 2-minute chart. Down close candle, bullish order block. If price trades down into it, you want to see that offer support. And then y'all remember this. Ah, oh, dang it, I took it off. For those who were paying attention, power of 3, that's what I want to see. So this is my thought process while I'm in this trade. We open, fix that. I swear I have OCD because small stuff like that triggers me. We open at 10 a.m., trade down, Judas swing, okay. I like the idea of everybody chasing this thing going lower. Everybody's chasing it going lower. People are making money going short, okay, all morning. I'm not interested in that. I want to ride the real move here. Your best buying opportunities are where? At the 10 a.m. opening price or beneath it. Okay, I'm buying way beneath the 10 a.m. open. Where's this fair value gap set up form? Let me zoom in. These candles are a little small. This fair value gap forms right underneath the 10 a.m. open. Could buy it there. Once we leave, I would have looked to pyramid or add anything to my position here. So this is the power of 3 formation. I want to see us run out the buy side and close near the high. Oh, it's already 11 o'clock, so I didn't even realize that. And because it's 11 o'clock, I can't really trail my stop any higher. It has to stay beneath that down close candle. But already, that's pretty much exactly 50 handles that I locked in. So accumulation is the opening price. So power of 3, accumulation, manipulation, distribution. Let me put that back on real quick. So accumulation is the 10 o'clock opening price. Buying near, at, or just below that 10 a.m. open, that's accumulation. The manipulation is the drop down that everybody chases. Everybody's shorting. Everybody's chasing this thing going lower. But if you remember, I talked about how that 15-minute fair value gap, we couldn't even reach midpoint. We couldn't even reach equilibrium of the range that we were trading in. I said if we start to move away, that's bullish. So this drop down is manipulation. The real move higher, that's distribution. And I locked in 50 handles here. Down close candle with the fair value gap. I want to see that support price. But now we're slowly entering the lunch hour, which can bring retracement. So the midnight opening price isn't guaranteed. The midnight opening price is only relevant up to 11 o'clock. And since we're past 11 o'clock, you can't really rely too much on that price level. Now you just have to start focusing on liquidity. But bullish order block coupled with a fair value gap, that's a high probability order block. And again, I'm looking for this target up here. I'm going to be more aggressive with my stop, moving it above, or below rather, of that down close candle. So mean threshold, trailing my stop just below that, give it a little bit of breathing room. And again, measuring order flow. This is a freaking masterclass, I'm telling y'all. I try to stay humble, but y'all know. Fair value gap, what did we do here? We left the lower half open. What does that tell us? That's bullish. That's strong order flow. Opening price of the order block, we trade down, we fail to reach that opening price, and we start to run away. That's bullish. That's smell it. Bro, 20, that I'm telling you, that comment caught me so off guard. It's crazy. For those who follow me on Instagram, you know what he's talking about. He literally said, bro, it's like the black ICT. I could smell the KFC inversion setup. I'm like, what? What? I couldn't believe it. What is your broker name? I use TradeStation. TradeStation. Again, I'm being aggressive with my stop simply because we're already past 11. What time is it? Shoot. I have lunch with a friend in like an hour, so this needs to hurry up. Okay, I'm moving my stop loss below this down close candle. At this point, I'm trying to hurry up and get off the charts because I'm grabbing lunch with a friend and I need to hurry up and get out of here. So I don't care if it stops me out. All right, I want to see this down close candle offer support, taking that opening price, and we're stopped. There we go. Good trade. Dubs, dubs, dubs. First real trade of the week. Walked it through. So that was a nice about 3.5 to 1 risk to reward. 70 handles. W's. Y'all know what we do. This is what we do, man. Walked it down. Every PD array, every area of support that should send price higher, explaining why and which fair value gap should stay open. Absolute masterclass. But this was fun. Hopefully y'all made some money today. Hopefully you learned something today. That's more important. But Andy, chill. Love y'all, man. See you in the live stream tomorrow at 9:30. All right? Peace.